Good afternoon and welcome to our weekly US markets review brought to you by SG Futures on Sunday the 6th of December. We're conscious we haven't done a decent video in a couple of weeks, so just wanted to give you an update on where things are from a US markets point of view. So we're going to look at the E-Mini S&P, we'll have a brief look at the Nasdaq, and we will look at the Russell 2000. And if you have some time at the end, we will have a quick look at a couple of stocks that we'll have a look at a couple of stocks that we potentially have our eye on as we come into next week. So we start here as always on the daily chart of the E-Mini S&P. This is the ES December contract. We haven't rolled into the next quarter just yet. And what we've seen this week, really over the last sort of 10-15 days post Thanksgiving, has really just been a gradual grind higher across this market. You'll notice over here that really since this sell-off at the beginning of November, we've pretty much been in balance since then. And in the early stages of last week, we broke above this balance area and we're now starting to grind higher. So if I'm just to mark out this particular balance area, I would see this as being a pretty nice balance area for us to work off moving forward. So if we get any sort of a retracement down here, we possibly target some of these downside levels in here. So if I was to mark off some downside levels, I would say that literally straight off the bat I'd be looking at potentially this level in here around about the 35.43, and then the bottom of the balance area, which would be sort of 35.08, 35.09 sort of price. So they're sort of our downside levels that we have our eye on this week. But really, over the sort of past 5 days, it's been a gradual grind higher. It hasn't been anything too crazy from an uptrend point of view compared to some other markets, and we're going to get to a couple of those later on. We'll see when we think things are getting really overextended. But one of the things that is worth potentially calling out at this point is we have this trend line that's kind of been relatively well respected over the course of the last 6 months, and we're kind of getting touches off it every now and again, and we're still sort of far away from it from an upside point of view. And at the bottom end of the channel will probably be along this sort of line over here, so probably just between the 20-day moving average and the 50-day moving average. So there are immediately some levels that we would be thinking of if we were to have a breakdown of this price continuation up here. Really, what's worth carrying into this week is that as we get into the futures this evening, we're going to be looking for really a continuation of this sort of bull trend higher up this way, and seeing really where that goes over the course of this week. There's not a huge amount of risk out there. We saw a pretty poor NFP figure on Friday, and the market really just rallied on the back of it. The market is confident regardless of what the NFP figure appeared to be printing. So we come into this week with a bit of a bullish narrative, and we really just want to keep buying dips until we're told otherwise, and that's really been the narrative for the last 2 to 3 years, really, when trading this particular market. But really, when we do come into next week, whilst we do have a bullish narrative, there is some pretty bad profile structure below this particular balance area in here. And if we were to jump into the weekly profile view, which I'll do over here, we can see some pretty horrible structure that there's a good chance if we do break down some of these levels that we begin to test them to the downside. So we can see this particular profile in here. This is last week's profile, and we closed at the very top. We closed near the top of the profile, just below the weekly value area high, so we've closed inside value. We have the VPOC down here for the week, which we would deem to be a pretty important level when we open up next week, 36.65-ish. But down below that we have a little bit of a gap in here, and you'll see it marked out by the single prints, and when we really zoom in on this we'll get the exact levels, but it's around the 36.33 mark, and it runs all the way up to the 36.41-ish So that's an area that we will look for potentially a filling of that gap at some point if we get any sort of downside momentum, and any sort of continuation further to the downside. We'll look at some of these gaps from previous weeks. So we have a gap from the previous week, which was the week commencing the 23rd, a gap from 35.91 down to I think 35.85-ish. Now we've mentioned across Twitter all week that 35.82 is a really significant level, and that corresponds with the top of the gap. And that corresponds really with an order flow point that we marked out in and around the top of the gap from the middle of that particular week. So that's a level we really have our eye on, and it also corresponds with this particular high over here, which dates all the way back to the tail end of August, believe it or not. So this is something we're going to have our eye on. If we break below 35.85, we do start to bring in some of these levels down here. They immediately come into play. Like there's a couple of single prints just in here around the 34.25, and then to the downside you got 33.94 down to sort of 33.83. So that's a pretty hefty gap we would look to try and get filled. And then the final gap we would look at down here would be 33.23 right up to 33.30-ish. So I think it's pretty unlikely that we do get down here. It would take something pretty catastrophic to happen for us to get down here, but I suppose never say never when you're trading the markets. I've seen it all at this stage, but that's some areas that we're cognizant of as we come into this week, and really it all hinges on this particular gap up here, which is around the 35.80 mark, corresponding to this particular high over here. So when we're looking at our market profile chart that we trade day to day, when we come in on Monday, we are conscious that we are opening pretty much we're opening below value from the previous Friday, and we are immediately testing some lows. So it's immediately showing us that we had some overlapping value from the previous week. And granted, this is after the Thanksgiving weekend, that we have some overlapping value, and we've broken from Friday's value, and we've traded down and tested some lows around the low 3600s. What's really infuriating is that we have a level down here around the 35.82 mark that we never got down to retest. And again, that's a narrative that we will carry forward, and an area that we will carry forward. We had an opportunity in C period here to fill the gap, and we didn't. So this contributes to some pretty poor structure across this market as we potentially break higher. This isn't a bad thing. It just means that things are extremely bullish at the moment. And if we do get a retracement, that these are areas that we will look for the market to slow down and maybe auction out a little bit and spend some time down here. But that's when we came in on Monday, and we had a relatively strong finish to the day. So you can see in M and N period, we closed back above the open, and that's really significant in that we spent all this time down here, and we would consider that a failure at the lows, and that immediately tells us that there's no value down here, and value is migrating higher, albeit the VPOC being right in the middle of this particular daily profile. But as we came in on Tuesday, we had quite a high gap. We had quite a significant gap to the upside, and we had a P-shaped profile, and we pretty much made an attempt to close the gap straight off the open, but then the rest of the day was spent mostly rallying and filling out a new value area up at these new levels up here. Then on Wednesday we had an attempt at closing the gap down here during A period, so we gapped down, but again we had buyers driving the price up higher. What it's left us with was overlapping value between Tuesday and Wednesday. So that is now an acceptance that there's agreement between buyers and sellers that they are happy about these new higher prices. They're happy to do business at these new higher prices. So when we came in on Thursday, there was a couple of things in our narrative that we were really looking at. Granted, we were opening inside of Wednesday's value, which was again an acceptance that, again, it was a form of acceptance of these new higher prices. But also we had a poor high from Tuesday, which we were looking to see would it be repaired. When we see just 2 ticks of excess up here, that immediately tells us that there's a good chance that we're going to come back and repair that and finish that auction, because that is effectively an unfinished auction. So that's that's tying into our narrative as we come into the markets on Thursday. We had a relatively bullish day. We had, again, overlapping values. So it's, again, confirmation that buyers and sellers are happy with higher prices. We printed a poor high during L period. So you've got OCD for market profile like I do. The 3 ticks of excess up here would tell us that there's a good chance we're going to revisit this area again. We had the VPOC, which is just outside Tuesday and Wednesday's value, which, again, it's in the lower part of the profile. However, it is above value from Tuesday and Wednesday, so it is in almost telling us that prices are going to go higher. That there is real acceptance that there's real acceptance between buyers and sellers that prices are being accepted at this level. Then you'll notice here we have our Friday Globex period, and we opened on Friday tremendously bullish, and this is on the back of a weak NFP figure. All things considered, it was a real miss on the NFP, and we ticked down by 2 ticks, and then we were off to the races for the rest of the day. And this is a value gap. So you can see we have the value area low at 36.83, and that is a full value gap from the rest of the week. We spent pretty much the remainder of the day filling out some levels up here. We closed above our VPOC, so we closed above our fairest price to do business over the course of the day, albeit it was during end period, which is a settlement at the end of the week where things pretty much grinded higher over the course of the 5-day period. So coming into next week, we're really unchanged from our bullish narrative. We will look to try and buy dips in and around the areas that we spoke about, around those particular gaps, and look for some degree of continuation to the upside. I think it's interesting that we printed the daily high was 3,700 on Friday. I think there's a real chance that we come back and we repair that. Granted, it is a good high. I think there's a good chance we come back and we auction that out a little bit more and look for some levels to the upside. I really think that there's an opportunity for us to maybe put another 100 points on this before we break for the holidays. The way things are going, there doesn't seem to be anything in the US market's way at the moment in terms of bad news. We got bad news on Friday and things went up. So I think it would take something pretty catastrophic for us to collapse on ourselves right now. So that's it from an E-Mini S&P point of view. I want to have a quick look at the Nasdaq 100. So our Nasdaq 100 is this is our daily candlestick chart in here. Again, we've had a relatively slight break to the upside this week. So we came in on Monday, we explored some lows down here into a previous balance area. We failed, and now we're pretty much printing some new all-time highs. So this particular level as we come into this week, it corresponds with the previous all-time high around the 124.30 mark. We will look for that to be perhaps retested. It is held on Thursday and Friday. If we get any sort of negativity around the Nasdaq, we would look for how it treats this particular level. So breaking below and closing below this level on a daily time frame would tell us that maybe we're maybe going to come back towards the 12,200 mark, 12,250 sort of level, and maybe start filling out some more of the profile in there. Or failing that, we're going to start printing some new highs. This isn't remarkably bullish. This hasn't gone completely off the page just yet. I think this is the market building out value in the shape of these particular candlesticks. There is real agreement between buyers and sellers that these new higher prices are being accepted by both parties. So we can expect a little bit of a continuation. It's not miles away from the 50-day moving average or the 20 if we had it in here. And there's a real chance that we just see some continuation this week. The market that's really been the outlier this week really has been the Russell 2000. And when we go into our Russell 2000, we can see here that over the course of the last 10 days, we've been in this sort of balance area. Let me just mark it out here. This has been a balance zone, so the market's been really in agreement between buyers and sellers across these eight or so sessions. And then on Friday, we had the proper break higher, and it's now printing some all-time highs. I think there's a good chance that we see a pullback in the Russell. It's getting significantly overextended when you look. It's come from, at the end of October, We're at the 1530 mark, and we're closing up some 300 handles higher, which is pretty insane considering how this market has performed over the last couple of years. I think this is potentially some of the small cap value stocks catching up with the Nasdaq and the E-Mini S&P. But it remains to be seen as to whether or not we're going to get significant continuation. I would be fairly reluctant to buy this market without a significant pullback. I think we are due a little bit of steam to be blown off on this market, and it would target some levels down here around the low 1800s, perhaps the bottom of this value, perhaps the bottom of this particular balance area in here around the 1760 mark, and then we will look for also the closing of this particular gap. We have this enormous gap, which was the 6th of November up to the Monday the 9th of November. Pretty hefty gap, never really closed, and we would look for some sort of closure of the gap, and we would see value. We would see a definite buy down here around the 1650 mark, which would probably correspond with the 20-day moving average. You can see we're very far extended away from the 20-day moving average, and it could be something that we may try and pick up if we get a dip down here in the Russell. So a quick look at some stocks before we close for the week. I really want to have a good look at Netflix. I think this is one that has the potential to break higher. We spent most of last week in a balance area in here. So we've printed balance across these four profiles. We have overlapping value. Granted, it is migrating lower. I think if we break below the sort of 34.92 mark, we're back into this area of balance down here, and we would target some lows down there. But failing that, if we get any sort of bullish momentum, we're targeting some particular highs over here around the 1514, breaking above the 1518, targets some levels that we've seen previously back in mid to late October. Then finally, I want to have a brief look at Microsoft. What we've seen again last week was some real consolidation of a period of balance, which was these candles in here. Really, it was Tuesday to Friday, and we have had a value break, a slight value break from the previous. Had a slight value break from Monday's profile, which closed in the value area high, which is significant. It was a tell that we were going to break higher potentially the following day in line with the other indices. And what we've seen is the value, once it's overlapping, the value is migrating lower, and I think this is just a consolidation of this particular balance area, and I feel like it's preparing for a potential move higher. And it really, the reason why we feel particularly bullish on these couple of stocks is really the index that these are traded in. We believe has further to go, so we will look for any sort of breaks higher on this. If we can test some of these, I think 213 is a real key area on Microsoft, and we would look to buy any dips below that, targeting some levels from over here back in early November. So the 224 right up to sort of 225 and above. So there are some potential levels that we're looking at, but there's really nothing out there that's telling us that things are going to get bearish anytime soon, and we're really looking at a potential continuation. So that pretty much brings us to the end of our weekly review. As always, you can check out our website, sgfutures.com, if you want to understand a little bit more about market profile and what it's all about. Otherwise, we hope you have a great week and happy trading.